Okay, so let's begin. If anybody else joins, then they're a little bit late anyway. So yeah, thank you for joining us this morning. So those of you that aren't aware, if this is your first of our Meet the Expert sessions, the Selkie project is organizing a series of these events focused on providing business support for companies looking to diversify into the marine energy sector. These events are here to give companies the opportunity to learn more about key themes from experts in the sector to help in the endeavors to enter and work in the innovative and growing industry that is marine renewables. It'll also give the opportunity to perhaps network and meet with some other companies that are working in this area. So we've had quite a few different sessions already over the last few months, and today's session will be focusing on raising investment, and we're joined by our expert today, Louise Santaana. So Louise is joining us from the GS Verde Group. And within that group, they have a corporate finance focused arm, specializing in investment raising, acquisitions, and business sales. So Louise is a director of Verde Corporate Finance. And in this session, Louise will be exploring ways businesses can acquire various types of funding, covering the various stages in an organization's life cycle where capital may be needed to be raised to support growth or exit. She'll talk about some real life examples and you'll have the opportunity to ask some questions at the end. So if you have any questions as they come to you, please feel free to put them in the chat and we'll come to those towards the end. So just a few little housekeeping things to go through before we begin. If I could ask that everybody remains on mute unless you are coming in with a question, that way we can hear everybody speak without any feedback or interruption. It would be great if people could put their company name in their Zoom name as well, just so we know where you're joining us from. You can just right click on your own image and add that there. I haven't even got my real name. I've just got Marine Energy Wales today, it seems. So yeah, I'll shortly hand over to Louise. As I said, put any questions in the chat. Also, if you need any technical assistance, I've got Sophie and Matt, two members of my team, on hand to assist you. You can follow us on LinkedIn and Twitter. That's at Selkie Project. You can use the hashtag Meet the Expert to talk about the event. You can also head over to our website, www.selkie-project.eu, to find out more about what the Selkie project is doing. I'd also like to just briefly mention our Road to COP26 initiative. So Marine Energy Wales, one of the partners in the Selkie project that I'm representing today, we're running our Road to COP26 initiative, which aims to demonstrate the sector's capability and ambition to align with the goals of COP26. We would like to encourage your participation by using the hashtag 26 for COP26 and hashtag We Support Marine Energy. Matt, maybe you can drop some of the information on this in the chat for people to see. So this is on Twitter and LinkedIn. Cite your participation in the Selkie Meet the Expert event as a demonstration of your involvement with the international reach and relations, as well contributions to the collaborative nature of the marine energy sector. So we're really just trying to build a bit of a buzz around marine energy in the build up to COP26. There'll be quite a few events that we're involved with, and yeah, just in particular trying to get those hashtags going. So I'm just going to do a quick presentation just on the Selkie project for those that are unfamiliar. I know we have a lot of repeat viewers in the audience today, so I'm sure you're well aware of what the Selkie project is. But if you're not, it's a collaborative project between Wales and Ireland made up of 6 collaborative partners. That's the University College Cork, Swansea University, Marine Energy Wales, Mentor Morn, DP Energy, and Gavin and Doherty Geosolutions. So what is Selkie? It's all about bringing together academia and industry. We are creating some open access tools for the benefit of industry, but also getting industry to feed in with that voice to make sure that the academic outputs are useful and beneficial to the industry. So as well as these open access tools that are being developed, there's a number of pilot projects that will be going ahead with a wave and tidal device, and then also what these events that you're participating in today are part of our sort of industry engagement, where we're looking to support small and medium enterprises that are looking to enter the sector. So just really providing business support and guidance to help you on your way to becoming part of this growing industry. And then we also have the Selkie Network. It's free to join. So this is just an example of some of the companies that have joined already. You can contact my colleague Sophie, who's on the call today, if you'd like to join the Selkie Network. So maybe if Sophie can drop some information on the chat about how best to get in touch with her. But anyway, that's enough from me. I'm going to hand you over now to Louise, who is our expert for today, and she'll be it's all about the world of raising finance. Over to you, Louise.
Thank you so much, Jay. So hi everyone, thanks so much for having me to speak to you today. It's really good to be part of these events that are being put together by Marine Energy Wales. So happy to meet you all. So in today's session, as Jay has said, I'll be taking you on a quick tour of the different ways to raise funding and grow your business. I'm also going to touch on some of the various business life cycle stages and where various funding options, will be good for your business. I'll also cover the typical process that you would need to go through when you're looking to get investment or funding ready. And I'll briefly cover a couple of other ways to release money internally. I think Matt was going to share some of the presentation slides as well, so I'll wait for Matt to quickly get that. Thanks so much, Matt. So if we go on to the first main slide, with that awful picture of me on it. Thank you so much. So I'll firstly just kick off and talk a little bit about me and the GS Verde Group. So as you know, my name's Louise Santaana and I'm the director within GS Verde Group. I also head up the group's fintech platform, which matches investors with founders that are looking for investment. So we do that kind of online, and we do that by meeting investors face to face, etc. as well. I've only actually been doing this role for 3 months, so I'm pretty new to the group. Previous to that, I was head of private banking and lending for Lloyds Banking Group. So most of my career has been in financial services, and specifically Lloyds Banking Group, and I've looked after commercial teams, personal banking, and done a variety of head office roles as well as the private banking role. So in terms of GS Verde, again, as Jay has already said, we're a multidisciplined firm where we have legal services. So the specialism in the firm is around commercial law, so contracts, intellectual property, also employment law. So anything to do with company law, really, they are specialists in that. We've got the fintech platform that I've already talked to you about. That is our investment network online. The corporate finance arm, which I'm also a director of, and I advise on all aspects of corporate transactions. We also have a business transfer team that look after the sales of businesses, an accountancy business, and also a communications business that deals with the PR and marketing for us and our clients. So that's a little bit about me and the team that I work with. Matt, if you go to the next slide for me, please. So you may already know there's lots of ways to raise funds throughout the life cycle of a business. And on this slide, around the outside, you'll see the basic stages that a business goes through. So early stage, or startup, or seed stage is often called, and then around to kind of scale up and growth stage, and then through to maturity or corporate stage, and then finally the disposal stage. And then in the inner circle, which I'll talk about in a lot more detail coming up, I've highlighted the kind of ways that you can look to raise capital. So for example, if you look at grants, growth funding, asset-based lending, private equity, crowdfunding, they're often done at kind of startup and growth stage, whereas employee ownership trusts, management buyouts are often done more at the disposal or maturity stage. So I'm going to talk about each of those in a little bit more detail now. So if we go to the next slide, please. Thank you. So if I start with growth funding or borrowing money, there are a number of options available, ranging from traditional banks to specialist lending providers. These options are good to use when you have the means to repay the money straight away. So you get a loan from a bank, it's a really good way to support your business ambitions to grow without giving away any equity in your business. And I'll talk a little bit more about specific types of loans as we go through the presentation. So the next one I'll look at is private equity. So this is where an investor, and that could be a private investor, an angel, an institution, a venture capital firm, or a private equity house, invests a sum of money into a business, and in return they'll get a stake in it. And typically an investor will want to cash in their shares and benefit from the growth normally within a couple of years, 3 or 4 years. But it does depend on the investor's perspective, and it does vary from investor to investor. Some will want high involvement in the business, which can be a really good thing, especially if you've got some gaps in the capabilities of the management team. Some will not want that. Some will have specific expectations for their return on investment. You know, some will be less concerned about that. And it's worth mentioning there about the ESG investors, who specifically invest in kind of environment, social and governance, so ethical businesses that have a positive impact on the world, or they have an ethical approach to the way they run their business. There's many investors now that are driven by this type of impact funding, so it's definitely worth noting if you're looking to get into kind of the marine energy world. You know, there's lots of investors out there that are driven by impact rather than purely financial gain. Okay, so next on the list is acquisitions. I just thought I'd quickly mention that. And part acquisitions could be where you're buying a business, or you're having a merger with a business, or a joint venture with a business. And that is for those wanting to scale up or diversify or expand into a new market. So acquiring a business or forming a partnership with a business can be really beneficial. And this is because that business will already have a good reputation, it will already have a market share, it will have a loyal customer base, and potentially broader location coverage. It also can keep cost management low, but obviously finding the right business to take on those ventures with is key. But it's really good when your business is looking to kind of grow and mature and expand, and find often is the best way to do it, rather than trying to do everything internally. So now the next one on the list is grants. So grants are highly sought after, as you can imagine. And the key thing here is identifying which is the appropriate scheme for you, and being really clear on what you need in terms of the amount that you want and the purpose for it. The application process for grants is very detailed, and there's 2 main sources of grant funding for companies in Wales. The first one is Innovate UK, and they do 3 different types at different stages. So they do a feasibility stage where you can get up to kind of 70% of the required funding. Then there's the prototype development type stage. Again, you can get up to 70% of the funds required for that. And then the final one is where you're building the final product, and you can normally get to about 50% of the funds, total funds you require there. Innovate UK also have lots and lots of competitions running at any given time, and they're normally geared towards a specific industry or sector, so you should definitely look out for those competitions that happen all the time. The second type of grant is the Welsh Government grants. So these are very limited and dependent on location, even within Wales. So you have different tiers and different priorities. And these grants would support capital expenditure and job creation, not anything else, just those 2 things. All the grants are discretionary and negotiable, and subject to rules and guidelines of that particular scheme. As I said, lots of competition for grants, and generally 1 in 10 probably get funded. So definitely worth applying, but I would recommend that you get some support with the application to make it spot on. And then finally on this slide, crowdfunding. So crowdfunding is quite popular. It's basically when you fund a project by raising small amounts of money from large amounts of people. It's normally done over the internet, so it's got benefits. It's quite easy to do. You normally do it through a platform. The downside of it is highly FCA regulated. It does take a lot of time and effort to get the money, and generally those people that are investing won't be sophisticated investors, and they won't play any big part in kind of running your business, if that makes sense. So if Matt, stay on this slide a second. So in terms of the process, you see at the bottom just a very high level process of the kind of things we go through. So we go through evaluation, which I'll talk a little bit more about how you assess evaluation of a business in a little while. You look at an information memorandum, which is also often called a pitch deck, and I'll talk about that in a lot more detail a little bit later. Then you go through the discussions and negotiations. Then all the due diligence, so researching whether you're a right fit for the investor and they're a right fit for you. And then you complete the transaction, and typically it takes around 3 months plus to complete that whole process. Okay, Matt, so if we go on to the next slide, please. So I said earlier that I talk a little bit more about lending and debt finance. So this slide covers the type of debt finance. So you've got unsecured lending. So unsecured is when no security is taken against the loan by the lender. But they normally carry higher interest rates because obviously the risk to the lender is higher. But it is a way of getting funding pretty quickly. It doesn't need to go through that whole security process. And then debt finance is normally when you're kind of amalgamating any debt that you've got currently, so consolidation, or refinancing a debt at a lower rate, and that can be secured or unsecured. So the pros of debt funding are that you don't give away any equity in your business, and you can repay it over a period of time that suits your affordability. The downside, of course, is that you generally need to make payments back immediately, which can affect your cash flow and your P&L. There is another type of debt finance, which is that last one, asset-backed lending. This is things like invoice discounting or factoring, whereby rather than waiting 30 or 60 or 90 days to be paid by somebody that you've invoiced, you can get that money up front, or the majority of that money up front, by paying a fee to the lender. But it means that it can really help with your cash flow, so you're constantly getting that money up, quickly, rather than waiting and having a problem with your cash flow. So that was just a little bit more about lending. So if we go on to the next slide now. I just wanted to say, in terms of the process that you look at, for debt, the financials are really important, making sure you look at the financials in a lot of detail. The pitch deck again, getting the right funding options for you, shortlisting the lenders, completing the application process, and getting approval by the lender's credit team. Okay, on this slide, I just wanted to quickly mention exit, because I didn't want to leave it out, because a lot of people are really interested in how they can create more capital for their business, or retire, etc. So there's a few things I just wanted to mention on here. So the first one is management buyouts or management buy-ins. This involves handing over the business to the current management team so that the business can continue its legacy whilst the founder can retire. Selling the business, that's pretty much self-explanatory. You sell the business, but it's quite a complex process, and finding the right buyer at the right price is often quite difficult. So that's the kind of thing that my company would help with as well. And then finally, something that's really on the rise at the moment is employee ownership trusts. So if you haven't heard of that, it's where a controlling stake of a company is owned by the employees. And the reason why it's very popular at the moment is the owner can sell their shares to the employee ownership trust for full market value without incurring any capital gains tax. And then the employees can own it either directly, so they own it, or they can own it indirectly through the trust, or a hybrid of both of those things. Again, the high level process of that is very similar to getting investment, where a valuation is done, a IM, so information memorandum or pitch deck, is prepared, negotiations take place, the due diligence takes place, and then the transaction is completed. Okay, thanks, Matt. If we go on to slide 7, brilliant. Okay, so I think this is the one I want to spend the most time on. So this is around, are you investor ready? So you know your options. You can go for equity, you can go for debt, or you can do a few other bits with grants and other things. But are you ready to be in the best position possible to get that investment or funding. So I just want to talk you through each of the components and what that involves. So the first one is your pitch deck or your information memorandum. And the key aspects to address in that are kind of as follows. So it needs to describe what you do. What is your product? So why is your product unique? Is there any protection in terms of intellectual property protection on your product? What problem is it solving, or what benefit does it have? What are your strategic aims? And it should also include kind of your exit strategy as well from the business. It should include how you run your operation, what your management team is made up of, making sure you've got kind of no gaps in how to run a business in your sector, what your target market is, what is your route to market, and what you're asking for. So what is the thing that you're asking for within the pitch? Are you asking for investment? Are you asking for funding? Why you need that funding? Also, a little bit of detail around the competitors. So who are your competitors? What is going to be the risks to your business from competition, etc. And then really important, making sure you have full details of your financials. So that could be actuals or forecasted financials. So the second thing on there is to tease the documents. So that's basically a condensed version of the pitch deck. So it should really grab the investor's attention enough to want to have more information, or if you're being looked after by a corporate finance company, you know, have enough information in it that they will want a formal introduction to you as a founder. Okay, so next thing is a business plan. So a business plan is similar to a pitch deck, but it sets out what you're actually looking to achieve in your business, short, medium and long term, and how you will achieve those things. Financials, as I said, financials is one of the most important things that investors look for. So you should really have detailed actuals if you've got them. If you haven't, detailed forecasts and sets of accounts that people can really dive into the detail of what your financial situation either is looking like or is expected to look like. The next one, which I also again wanted to spend a little bit of time on, is the valuation. So valuations can be really subjective, but they're so important when you're looking to raise funds to make sure you get the right deal for your business. So there's different methodologies that you can use, and they are qualitative methodologies, especially when you're a startup, or quantitative methodologies, which you can use in startup with your forecast, but you can also use if you're post revenue. So a kind of qualitative method would be looking at things like the strength of your team. So what is your management team looking like? Have they got sector knowledge? Have they got all of the right components to be able to run a business really efficiently? The next thing is the strength of your product. So is it protected? Is it unique? Does it do something different than somebody else can do? What is your operational efficiency is also really important. Also, what about your competitors? So things like valuations are often done when they in terms of comparisons of like companies. So if somebody does something very similar to you, we can look and research into what they're valued at and do a comparison there as well. So, you know, that is also very important. The other thing that's really important is strategic partnerships. So strategic partnerships are where you've got somebody influential in the sector, or you've got a established business as a partner already, and that can definitely go in your favor. And then each of those components is assigned a value depending on how good you are in that particular area. And then you can overlay that with forecasts and the kind of rate of growth that is expected also in your sector. So quite a complex process. It definitely needs to have a lot of thought put into it. And I would recommend, again, somebody professional doing any valuations for you, just to make sure you get the right deal. For post-company revenue, you can use EBITDA, which is basically profit as a basis for valuing the business. And there's a variety, again, of calculations depending on the type of business you do, in terms of what you can times your revenue or your profit by to get to the right valuation. And the next thing on here, just a simple one, but logos and images that they really can showcase your brand. It's always good to get those right from a marketing perspective. And then the final one on this slide is SEIS or EIS assurance, advanced assurance. So what that stands for, if you don't know, is Seed Enterprise Investment Scheme or Enterprise Investment Scheme. And they're very attractive. To have that is very attractive to investors because there are big tax benefits in them when they use their money to invest in a business that has that advanced assurance. It's around 20% tax relief, so really good for an investor. There's some eligibility criteria for both of them. So for SEIS, you need to have less than 200k in gross assets pre-money and no more than 25 employees. For EIS, that is no more than 250 employees. For SEIS, you can't have been trading for more than 2 years, and that again is longer for EIS companies. There are some businesses that are automatically ineligible for SEIS or EIS assurance, and they're people that tend to deal in land or commodities or shares. So banking, insurance, leasing companies wouldn't be eligible. Legal accountancy businesses wouldn't be eligible. Property development businesses, farming, nursing homes, hotels, shipbuilding, production of coal and steel, those kind of things would not be eligible straight away for that assurance. Okay, so kind of in summary, there's lots of options for raising capital or getting funding. Private equity, so the benefits are you can get cash and expertise in your business without immediate repayment, but you will be giving up a share in your business. Second one, finance. So benefit is that you're not giving up any part of your business, but you do need to start repaying immediately. Obviously, there's grants. Absolutely great thing to be able to get. Free money, a bit difficult often to secure. Crowdfunding, again, lots of small shareholders. So pros and cons of having lots of small shareholders. And then obviously I spoke as well about MBOs, mergers, acquisitions, employee ownership trusts, all good ways to bring capital into your business from an internal perspective, but also helps when you're looking to diversify your business or to create extra expertise within your business. And then again, in summary, just the things that will really strengthen your case when you're looking to raise funds are going to be robust financials, really robust financials, having a compelling story, goes without saying, having a great product that has a big impact and potentially could be intellectually property protected, and does something a little bit different than someone else does. Having a great management team is the next thing, and that again, I'm going back to what I said, having great expertise in the sector, but also someone who has experience of risk management, fiscal management, regulatory experience is really, really beneficial. So those are just the things I think, to take away. So I hope today's session, the whistle stop tour, has been helpful. Obviously, there's a huge amount of detail that sits around all of the things that I've talked about, and if anyone is interested in exploring anything in more detail or would like some support from me and my team in terms of how you go about doing some of those things, or us actually doing some of those things for you, please do get in touch with me and reach out. I'd love to hear from you. In the meantime, if we go to the next slide, I'm really happy now to take any questions, so I'll let Jay facilitate that.
Yeah, if you'd like to stop sharing the screen, please, Matt. Yeah, so now we'll come to our Q&A like we do in all of these sessions. So I'd like to invite anybody to raise your hand or pop something in the chat if you have a question. To kick that off, Louise, what are some of the sort of common pitfalls you see with the people that you work with when they're trying to raise finance?
Yeah, I think the common things are around valuation. So people can either under or overvalue their business, because as I said, it is very subjective. So they get a lot of challenge if they haven't done their homework or research around the valuation, and they could end up giving more of their company away than they need to by not doing the kind of research and due diligence on valuation. The other thing is pitch deck. You know, often I see people who are absolutely brilliant at what they do, but probably from a financial perspective are not quite astute enough to really make it compelling enough for an investor. So if they like the idea, that's great, but you know, an investor will want to know that you're really close to the financials and know exactly what you're doing when it comes to financials. So I think those two are definitely the two biggest things that I come across. The other one is management team. So you sometimes see weaknesses in a management team, which can also put off investors.
Okay, thank you for that. TJ, you've got a question. Would you like to come in?
You're on mute, TJ.
He's slowly joining us. There he is.
Hi, TJ.
Hi, good morning. Thanks for that presentation. Really interesting. It's a sector of the business that I don't think any experience in. I just have a few questions. One is, do GS Verde do project evaluation? If a proposal was close to being submitted, say it was for a grant application, Horizon Europe, does your company do evaluation on the proposal?
Yes, that's a short answer, but yes, we do.
Okay, and what about post-project?
So so when you're doing negotiations, or what specifically? We do everything end to end. So if you came to us and you had a project and you were raising money, we could do absolutely everything in that kind of timeline of things that needed to be done. We prefer to get involved at the outset, so we really understand the business, because it's really important for us to build a relationship and understanding of the business, and then see it all the way through. The only thing we don't do in GS Verde, of all the things I talked about, is crowdfunding. So we don't do crowdfunding. We leave that to kind of the crowdcube people that are good at that kind of stuff. So yeah, we don't do it. We're more kind of a one-to-one advisory service. So we engage directly with investors or funders, and we engage directly with the client. We don't tend to do things that involve lots and lots of different investors that we can't we know nothing about.
Okay. Let's say if there was a project and it was finished and they were looking to do basically it's post-project evaluation. You know, how did they meet their targets? What are their financials like? Can it be measured as a success? Does GS Verde work along those lines?
So basically a post-implementation review kind of thing.
That sounds good.
We can do. We don't generally do them as a standalone thing, but we can do. You know, if you want to speak to me offline, TJ, about what specifically that is, I'm happy to chat to you about it to see how we can help.
Okay. It'll be a case-by-case basis.
Yeah.
Yeah, we can discuss. We can discuss later. Thanks.
Yeah, brilliant. That's okay. Thanks, TJ.
All right.
So I noticed David has also got his hand up. David, would you like to come forward?
Hello. Thanks very much. That was really, really useful as a startup myself. It's probably I'm sweating under the collar a little bit, going, I probably should have done that. But anyway, I'm just quite interested because in this industry, I guess if you're successful, you'll be in a team with others under a project finance deal. Let's say, I don't know, Swansea Tidal Lagoon or something like that. You know, it's probably, if it happens, it's going to be project finance. So how would from my experience or from other experience, you're going to be maybe going into bed with very large corporates with very large balance sheets trying to win a project that may or may not make money within 7 years. How could small companies get involved in bids for major projects? And that their product or their device could be the winning formula.
So do you mean how could investors get involved in it, or do you mean small companies who want to bid for a tender?
Want to bid for a tender or compete with, get involved with majors and those kind of companies.
Yeah, so I mean, the key thing for me is putting a pitch together. So, our company would do this. I think a lot of people call it a beauty parade. I'm not sure whether that's the right name for it, but I think a lot of companies are interested in who can do what they want to get done in the best way. I have a client who is not, a multinational company, but has actually won a big tender, and therefore needs a lot of money to be able to fulfill it. But I think the key thing to me is showing that you understand the business that you're tendering for, and you've done your research, into their financial situation, you've done their research into what they really need, what their strategic aims are, all of that, and as well as doing the research in the particular sector that they're in. So that's the first thing. And then it's being able to showcase what you do as a business to make you the perfect the perfect solution for them. And it's about linking back to what they really want and showing that you can tick all the boxes. And then it shouldn't matter how big you are or how not big you are. It's about what you can achieve for them.
So in the renewables business, it's give or take 7 years before anything is erected or built or whatever. Yeah. So is there advice for a small business to last 7 years without making money?
So yeah, I mean, you would ideally want to be making money within 7 years, wouldn't you? But there are, I talked about ESG earlier. So there are investors that, as I said, are more interested in the impact that will have on the world than they are in just the fiscal situation. So they're more interested. They probably go into those deals knowing that they're not going to make their money in the first few years, but they're more interested in, as I said, impact, and it is called impact investing. So that's what that is. Is that what you mean?
Yeah,
David?
yeah, I think so. Yeah, I mean, like I said, it's I think what's really useful about this conversation is that the mix between corporate finance and project finance, which people don't maybe talk about too often, because usually the companies that do involve in project finance don't have to worry about corporate finance to a certain extent. So it's probably, I think for this industry, it's something that people need to think about. Balancing the two. But thanks very much.
That's okay.
So I noticed we have a few developers on the call. Just maybe a prompt to see if any of you would like to come forward and perhaps share some of your challenges or experiences that you've been through with regards to finance. Maybe Louise can offer some insight into how things can be improved upon in the future. Or if anybody else has any questions, please do come forward. We have plenty of time today. Give people a few more moments there. You talked a bit about grant funding there as well, Louise, saying that only about 1 in 10 are generally successful. Do you have some sort of advice or pointers for really getting the most out of grant funding applications?
Yeah, always apply for as many of those are appropriate as possible for you. And also, as I think I said earlier, it's always better to get somebody who has connections. So within our firm, we have connections with local government and so Welsh government as well, and Innovate UK. So we know what they are looking for. We kind of know the criteria and what kind of level of detail is needed in order to get a grant accepted. You know, things like if you're creating jobs in Wales is really good. The capital expenditure, so obviously, you know, creating a warehouse or a manufacturing site, which then creates a load of jobs, is quite compelling when it comes to grants. The Welsh Government don't look at things like production though, so, you know, don't waste your time filling out a grant form for something that they're not ever going to pay out for. So knowing some of those things is really important. But definitely keep an eye on the competitions that happen in Innovate UK, because they are, you know, they are constant, and they've probably got about 20 going on at any given time, and they can be really good. You know, they're not huge amounts of money, but they definitely make a difference, and they help with attraction that then attracts further investors down the line, if that makes sense.
Yep.
So yeah.
So we've got 2 hands up now, so we'll just go through them in order that they went up. So TJ, and then we'll go to you afterwards, Tara.
It's not a question, it's just more of a general background. I just wanted to know, what are you working on now? What have you done recently? What are the success stories? Have you any good anecdotes you can tell us? But we can come back to this if Tara has a proper question.
We've got plenty of time at the moment, TJ, so we're not in a rush.
So we have lots of successes with raising funds, selling companies, etc., doing deals. So we've done deals for Abergavenny food company. You may have heard the men's Mizoa for men, which so I can only really talk about things that are in the public realm at the moment. But so we've got lots of, you know, really good founders at all different stages of their business life cycle that we've got success stories for. So as I said, we've got some startups that are now, you know, being really successful, and we've got lots of acquisition type businesses that we've done really good deals for as well. So we've got quite a few going on at the moment, but for obvious reasons I can't really talk about them. But some of those business, you know that are going to be highly profitable. We've got one sustainability client at the moment with some massive contracts now to fulfill, so that I'll take them from pre-revenue to multi-million-pound company very quickly. So lots of, but for obvious reasons I can't talk in detail about those clients.
I suppose if a company came to you and they had an idea, a startup company,
yeah,
would GS Verde, how would they take a stake in the company as payment, or would they be?
We don't generally take a stake in the company. I know some corporate finance companies do that. How we work is, if somebody wants our standard service, which is putting them on our fintech platform, we take a success fee. So once the transaction is completed, and that will include us doing the work in terms of finding a match for them. It will also include all of their legal contracts for the raise, and it will include the PR and marketing for the raise as well. That's how that works. If somebody wants a bit of an enhanced experience, so if they want us to do their pitch deck for them, if they want us to do their professional valuation, if they want us to do their EIS assurance application, then we charge an upfront fee to do that, because obviously it's a kind of a standalone thing that we do for them, that they can take anywhere else and raise money. So but for people who are startups, a lot of our clients, we deal with them based on a success fee. So they pay us when the transaction is completed, when they've actually got enough money to pay us, rather than taking a stake in the company.
Okay, that's great. Thanks, Louise.
That's all right.
Tara, would you like to ask your question?
Yes. it's more of a scenario actually. So hi Louise.
Hi.
I'm director. I'm just the only person in the company at the moment. It's a marine energy company. I'm lucky enough to have attracted the interest of the universities in South Wales, who have taken an interest in what I'm doing. So I'm quite a long way from thinking about finance at the moment, because they're able to do it through the research facilities that they've got and the grants associated with those. What would I need to start thinking about, would you say, as a first step, as just a very small SME with just myself and an idea which is looking promising?
Yeah, so I think it's about formulating some of those things. So it's getting your business plan, so you're really clear about what it is you want to achieve and how you want to achieve those things. Starting to think about your pitch deck. So starting to think about what are the things that I talked about earlier that you need in order to make your business compelling for somebody want to invest in, or for somebody to want to lend you money. You know, a little bit about your start thinking about your background and you know, how compelling you as a founder is going to be to future investors, and surrounding yourself really with people that can help you with the things that you're not good at. So, you know, it's not always nice to tell somebody that they may or may not be good at something, but, you know, you'll know, I'm sure, what things that are going to be gaps for you in terms of running a business, you know, post the idea stage, getting enough people around you to be able to help you maneuver your idea into something that is tangible in terms of a business. Okay. Those are the key things, and all those kind of things, you know, we could help you with, but you know, and we also do things like outsourcing certain things. So I can be outsourced for non-exec director stuff, because obviously I have experience of running a P&L business. We've got somebody else in the team who is outsourcing FD, financial director type role. So, you know, there's always people within our business that can help bridge the gaps as well, without you having to employ somebody full-time to do those things.
Yes.
So yeah, those are probably the key things for me.
Okay. May I ask something else as well, Weston?
Of course, yeah.
I'm lucky enough to have a brother who's a CFO of a successful company, quite a big successful company. And I'm just thinking at what stage he's offered to be a director, at what stage he should become a director.
So he should really do it probably when you, so is your business being incorporated, is it in Companies House yet? Have you established your business? Right, okay. And how long off trading are you, do you think?
Oh, there's a huge amount of research and development to do, even to validate it. First off, so
I would suggest he comes along to be a director when it starts, when commercial traction starts happening. So when, you know, you are in a position where you need to start thinking about those things that I just talked about, your financial forecasts, etc. That's when I would bring him on board. Right. He's probably not needed in the research development stage, and development stage, because you've probably got all that know-how within you. It's when that starts to, when you start asking questions around financials, that's the time to bring those experts in to help you. Yeah. And
would he carry with him a lot of credibility for investors, having those credentials? Yeah. Yes. Okay. Thank you.
That's okay.
Thank you, Tara. Anybody else? We have about 10 minutes left, so we have Louise until the end of the hour. So there's still an opportunity to come forward if you have any questions, or if you have some scenarios you'd like to put forward, as Tara did.
I can give my 2 pence worth if you like, Jay.
Yeah. Hi, Gareth. Come on in.
Hi, Jay. Yeah, morning. So yeah, kind of, I guess 2 pence worth based on experience, really, of doing a bit of this over the last 13 years. In terms of grant funding, I'd say get going with it. And what I mean by that is, if you're looking to get big grants, which are inevitably needed, big capital R&D type grants, 10 million pound plus, which Marine Power Systems has been successful at getting, like kind of now or the last few years, it's pretty essential that you go through the process, do the technical commercial feasibility studies and get the kind of 100 grand grants matched by 25k, then progress to £500,000 grants, then getting the few million, and then eventually 10 million. It really is a process. I mean, kudos and hats off to companies if anyone's ever managed to go straight in from a pretty new company and get a massive grant, but they want to follow their money and they want to see you demonstrate some traction and success before they're going to plow a lot of kind of public's money, which is what it is ultimately, totally public's money before they put it in. But that also helps you really kind of, it's a good process. It's a bit frustrating that you've got to kind of work your way up, but that'll tell you whether you've really got a viable product or a viable business. It's economically viable to actually happen, where you've got something that's patent protected. And yet agree with Louise on getting support to help that grant process. It is worth paying a bit of a kind of on success percentage type success fee arrangement or an upfront retainer, but getting some support. And again, unless you've got experience from other companies and you're fantastic at writing grants. There is a lot of grant funding out there. It is really competitive. Again, reiterating what Louise said there. Innovate UK is good. We've had those, and Welsh government, and let's see what happens in replacement of the RDF funding. But that has been pretty fruitful. In terms of kind of private investment, I think crowdfunding is really good. But I'm sat here saying that we've done 2 rounds of crowdfunding. We did a round last year, went out for 1.5 million, did 2.3, so overfunded. Last year we did, this year we went out for 2 and raised 4.3. So, well over 100% over. And I think I'm saying that's not me, that's the team have achieved that. But what I'm saying is we're all in a really good sector right now. Yes, we've got hopefully a good team, the IP, kind of the credentials that, again, Louise said it's important to be investable ready. We've got good financial model, good deck, all of that. But actually, I think there's another kind of 20% to tick, big support that just by being in the right sector, in this, i.e. the marine renewable sector. There's a lot of interest from those little investors at the moment. And you only need, when you say little investors, there's quite a lot of people out there happy to put, subject to a bit of diligence, a bit of, 5k in. And so, you only need 20 of them and you've got your first 100k of investment, which hopefully you can match fund and bring in another 100k. So, I'm a big believer in crowdfunding, and I'm saying that like 2.5, 3 years ago, having not done it, I'd probably been not sure, but it's a really good place to be. I think companies that we've talked to, and it might use GS Verde and there's others. I think you guys, this is just my opinion now, but I think you guys are really good when you come into like the 5-10 million quid investment required. But I think where companies like that add value is getting your investor ready. I think my kind of one, not caution, but for me, and again, great if it happens one day, but there's no company you can go to like an awesome black book and you just turn up, pay them a fee, and they've got this like amazing black book, and they'll ring 10 people and 3 of the investors will come back and say, yeah, we're all up for putting 10 million in, and you get a big fight on which one you choose. Like, I think people think once they've paid a kind of boutique corporate financial advisor, it's a given, and it's not. But that's not a negative or a criticism in any way. I think without companies like that, it doesn't actually shape you, challenge you, define you, and ask the difficult questions. So you do actually go, I think it was like David says now, like a bit of sweat under the collar, or it might have been John, sorry, apologies if I got it wrong, but it's actually there's some work to do here. And by going through that process, you'll get that IM polished, you'll get that business model ready, and you'll do all the hard steps, so that when you, it might ultimately be you as a company who find the right investor because you already had some in mind, or they might come to you. And we have had some institutional investors, and that's been helpful, but it's going through that process which does add value and does force you to go out and do evaluation and get all the other pieces of information available from the data room, or from the data room that you'll provide. So yeah, no question, I don't know if that's helpful, but that's just like my 2 pennies worth based on actual experience, I guess, of being in the sector and raising that kind of sums of money. And I think yeah, kind of happy to, you know, we're all here to support one another so this sector's successful, and happy to help out where I can.
Yeah, thank you for your input there, Gareth. I'm sure, yeah, definitely some lessons there that could be useful to some other people on the call. Louise, do you have anything to add in relation to what Gareth just said? And then we'll come to David as the last question then, because we are approaching the end of the hour.
No, I agree. I totally agree with everything he said. You know, definitely our biggest thing is getting people investor ready and doing the negotiations to make sure they get the best possible outcome. So yeah, you know, absolutely right. In GS Verde, we do anything from very small raises. So, you know, I think my lowest is maybe 150k, right up to kind of 5 million for startups, and then obviously it gets bigger as we do other kind of transactions. But yeah, and the other thing I was going to say was we're fairly sector agnostic. So, you know, anyone can come to us. We don't specialize in anything particular. We've done a lot of research in lots of different sectors, so we're pretty au fait with most sectors. So yeah, but that was it really. So I'll let David ask me the final question before we finish.
It was only just a tale or something to from experience. Somebody mentioned, I think it was Tara Copley's house. Very simple story. I was made a director of a community organisation in the UK. It was happened to be funded by the Irish government, and I was only involved for maybe 2 years and left it, or saw they left it. And it was a few years later that someone got in touch with me and said, by the way, this is about to become bankrupt, and you're a director on Company's House for this organisation, which obviously I couldn't believe it. And there was a few other people like me who were directors at the time, and they were, let's say, there were a lot more respectable positions than I had, and it could be the serious consequences for everyone. Luckily, we got out just in time, but you know, I had no idea that I was about to be director of a company that was about to be made bankrupt. I thought I was just getting involved for the good of the community, and a little did I know it could have destroyed me.
Oh dear.
Thank you for that word of warning there, David. Cheers. So yeah, we're going to close up the session now. So thank you very much to Louise for giving us her time today. Thank you for the presentation and for answering questions from people, and hopefully everybody on the call found it useful. Just to make everybody aware, we have another one of these sessions coming up. We just have one more in the schedule at the moment. So it's testing and validation on the 30th September. 10 a.m. just like today. So that will be Blue Wise Marine, who are behind Smart Bay. They'll be talking about how you go about testing and validation from an Irish perspective. We've already had Meta deliver on a similar talk. If you go over to the website selkie-project.eu, you can register for that upcoming event. I'm sure one of my colleagues will drop a link in the chat. You can also view back all of our previous sessions on there as well. And this one will be uploaded as well. So we'll share this, we'll share our previous sessions. You can access these as resources to help you as you try and gain work and enter this sector. Yeah, thank you to all of our attendees for joining.